Let's talk to Rahul Khanna. He is an FX strategist at Tradermade. Rahul, Happy New Year to you and your family.
You too.
Right, you've kindly sent 4 slides. Let's kick off the first one. The US dollar against the Canadian currency, the loonie, a daily chart. What are your thoughts?
Yeah, so we've seen a massive drop in dollar CAD, and this is on the back of employment report from Canada, which has now ensured that we're going to have a potentially or very likely have a rate hike next week from the Bank of Canada. But given it stopped at those levels, and around 82 basis point of rate hike is priced this year from Bank of Canada. That's quite steep from any standard, which means we're thinking that we might well be on the way to see a little bottom on dollar CAD before it goes higher. So it depends on what's happened next week from Bank of Canada, but I think those levels we pointed out around 123.40 to 124 area.
Key support.
These are key support. So if they go, then we can have a deeper setback towards 120. But even then, I think that could be it for the dollar CAD low for the year. And then we see a gradual rise afterwards. The idea here is that all of this is priced in. The rate hike next week is 82% priced in, 82 basis point, 3.25 rate hike priced in for the year. So I don't see any more for this to push down. And on the other side, dollar is pretty weak, and it sort of looks like there's only upside on that side as well. So I think dollar CAD is probably going to move towards 126.50. That's the key resistance here. If it breaks that, I think we can quickly see 129. But I think over the time period, that's 130 to 132 is where it's going to stop, and then we'll see probably a gradual return to weakness. But okay. For the short time, things. It looks like any dips on dollar cash should be opportunity to buy.
To buy, understood. Okay, well, let's move on to the dollar index. Again, a daily chart. What are your observations here?
So dollar index again was weakening quite rapidly, and then we've seen a little consolidation, as you can see on dollar index. Investors were saying, after the tax cut reform comes in, dollar is going to strengthen massively. That hasn't, fructify, because obviously, as we've seen, there was a lot of hype around it. Equities have done well, but FX, we weren't sure what the impact is going to be, and I think that will remain for the time being. So anything we see from here on will largely be on the basis of short-term data points and what Fed says. One of the prime data that's coming out tomorrow is the US CPI and retail sales. So I think US CPI is what the market is going to focus on. If we see good numbers, I think we probably see 93 to 94 area hit on dollar, but I think that's where it's going to saturate, and then we see choppy range continue, because the big thing is the dollar tax reform, how they're going to impact US, but at the moment nobody's sure. And also on the other hand, there was news from yesterday from China, which is that they might stop buying treasuries, which lead to dollar softening, like you can see yesterday's scandal, massive. But I think that's not a big concern point for dollar. And if anything, dollar is in a way, will be positively impacted if China were to stop buying treasury, because the world has a lot of exposure. So I think the risk on assets will actually do worse off if this has ramification. So either way, dollar looks like it might have a bit of a recovery from here.
Okay, let's take a look at dollar yen. Daily chart. What are your thoughts there now? In simple sort of technical parlance, this looks quite toppy, doesn't it?
Yes, it looks toppy, and that is why it's interesting. I think that's why I think 111, which is 110.96, I think is now the crucial level personally. And I think that's the level where if it breaks, then it's quite potential that we have a much deeper setback on dollar yen. And some of the setback is on the back of BOJ reducing their purchases, long-end purchases from 10 to 25 years, which has led to this drop in dollar yen. Basically, yen is strengthened. Yeah. While dollar has strengthened has done relatively well against others, yen has strengthened, has been the strongest currency over the recent days. So if that 111 breaks, I think we can have a deeper drawdown. But like I said on the previous slide, there is some positive news going for dollar, and also given the fact that BOJ will see this as a warning sign. They've done only a little bit of indication, and then we've seen yen strengthen. So yen strength will be there concern point.
Just using very simple technical analysis, you've got a double top, which is a topping formation. You've got a weaker right shoulder that basically isn't as high, showing a sign that the sellers are coming in. And the text would say a break of that 111, you're back to 100.
Yeah, but in terms of technical as well, yes, if 111 breaks, then there is hardly any support below there. So we will see 109 fairly soon if that does break.
Yeah.
But I think it's not more than a morph because of head and shoulder formation. It's just like if you see from May, it's been sort of choppy in the range. So I think if that breaks, then we will have a deeper drawdown technically.
Right.
But there's still we're already seeing support around rise around 111. So I think if it fails to break that, then we can have that recent choppy range continue, which is between 114 and 111. So it depends if that. So that's why that level becomes crucial.
Okay, let's wrap up with 10-year money. We've got the weekly yield.
Yes.
This is the scary chart for most people this year, isn't it?
Yeah, yeah, it is. But I think there's a lot of chatter. Most of the rates analysts or the bond market guys keep saying that it can't be as simple as yield rising throughout 2018. We've heard this been enough times. We heard it in 2016, 2017. But if you look, this is a 2-year chart, and we're already seeing a higher base being formed here. And given the US economy is doing well, tax cuts coming in, look at data worldwide, right? It's quite positive. So I think it could be as easy as it breaking those, it's going to the next level, which is 3%. If that to 62%, 2.62% breaks in the medium term, in the short term. But in order for that to happen, a few things needs to happen. So US CPI then becomes crucial, like I said. But I think for the timing, it could very well be that could be the top in the short run, and we see that consolidation in 2.3 to 2.6%. And once it eventually breaks, I think we'll go back to 2.8 to 3% gradually. I think it all happened gradually because, back a few weeks back, I did an interview with you, and if you see right in the corner, it's a weekly chart, but you can see there was a head and shoulder sort of a pattern forming, which failed. Just where the 2.3% line is. Yeah. If you see it in a daily, it's much more obvious. But that failed, and the market went higher. So I think that's becomes now the base, which is 2.3%, and it should hang around in that area for now. But if US CPI were to surprise the market, then that can break, and then we can see dollar higher, yields higher.
Okay, we run out of time. That's the chart that I'm really interested in this year. Rahul, as always, thank you very much for your time.
Thank you.